Okay, so what if I told you there's a trading strategy that boils everything down to just a single dot on your chart? Well, that's exactly the promise of the Parabolic SAR, which is our fifth strategy in this series. But here's the twist. What if the absolute simplest signal is also the weakest performer? That's the puzzle we're going to unpack today. I mean, just think about how clean this is. There's a dot below the price, you're long. The dot flips to be above the price, you're short. And get this, that same dot automatically trails your position, acting as your moving stop loss. On paper, it is probably the most simple, most direct system you could ever imagine. But, and this is a big but, when you run the numbers, it's the weakest strategy we've backtested in this series, by far. So you're probably asking, why are we even wasting our time with it? Because, and this is the whole point, its greatest weakness is also its hidden strength. And figuring that out, well, that's a huge lesson for any trader. So to really get to the bottom of this, we have to go all the way back to the beginning. We need to look at the person who came up with these dots and the core idea that brought this whole indicator to life. And the mind behind these dots? It belongs to a true legend in the trading world, J. Wells Wilder Jr. Back in 1978, he published this book that, honestly, changed everything. It gave us huge indicators like the RSI and the average true range. The Parabolic SAR comes from that exact same brilliant mind, so you know it has a serious pedigree. The secret to the whole system is right there in the name, SAR. It just stands for stop and reverse. That's it. It prints a dot on your chart, and that dot is your trailing stop. The second the price touches that dot, you do two things. You stop the trade you're in, and you immediately reverse into a new trade in the opposite direction. That's the engine right there. So how in the world does the indicator know where to put those dots? Well, it's not random. It's all about math, an accelerating curve that's always trying to catch up to the price. The best way to think about it is like a car that's chasing the price. Right when a new trend starts, the car is kind of slow, keeping a safe distance. But as that trend keeps going, making new highs or new lows, the car hits the gas and starts accelerating, closing the gap. That motion creates this beautiful parabolic curve. And, more importantly, it automatically tightens your stop loss as the trend gets older. And what's pushing that car? It's something called the acceleration factor, or AF. You can think of the AF as the gas pedal. It starts off real slow, at a setting of 0.02. But every time the price makes a new high in the uptrend, you press the gas just a little bit, the AF increases, and that dot jumps closer. It keeps speeding up until it hits its speed limit, which is 0.20. That cap is super important because it keeps your stop from getting way too tight. Okay, now listen up, because this is probably the most important part of this whole explainer. The SAR dot might be the star of the show, but you never, ever use it by itself. To make this work, you need a full rulebook complete with some really important filters and confirmations. So the full strategy is really a team of four. You've got the Parabolic SAR, yeah, that's your main signal and your stop, but then you have the 50-period EMA, which is there to make sure you're trading with the big trend. Then you bring in the RSI to confirm you've actually got some momentum behind you, and finally, you look at volume to make sure there's real money and real belief behind that reversal signal. And I really can't stress this enough. That 50 EMA filter is a lifesaver. If you just trade the raw Parabolic SAR by itself, you will get absolutely chewed up and spit out in a sideways market. It'll just whipsaw you back and forth, in and out, for a string of frustrating little losses. But by adding just one simple rule, only take buy signals above the 50 EMA and only take sell signals below it, you filter out a massive amount of that market noise. All right, so let's put it all together into a simple checklist. For a long entry, you need 4 yes answers. Number 1, did the SAR dots just flip from above the price to below it? Yes? Great. Number 2, look up. Is the price trading above the 50 EMA? Yes? Okay. Number 3, glance down at your RSI. Is it over 50, showing bullish momentum? Yes? And finally, number 4, look at the actual candle where that flip happened. Is the volume higher than average? If you can check all 4 of those boxes, you've got yourself a valid trade signal. Okay, so that's the system. It's mechanical, it's clear, it makes sense. But the million-dollar question is, does it actually make money? Well, let's put it to the test. It's time for a 20-year reality check with the raw, unvarnished data. And boom, this table right here tells the whole story. This is the paradox in black and white. When you put the Parabolic SAR up against the other strategies we've looked at, it comes in dead last on almost every single important metric. The win rate, the risk to reward, the annual growth, the Sharpe ratio. You name it, it's at the bottom of the list.
And just let that win rate sink in for a second. 54%. I mean, yeah, it's a little better than 50-50, so it's technically profitable, but you're pretty much flipping a coin on every trade. And that's exactly what happens when you get caught in those choppy markets, even with all our filters in place.
You can really see the difference when you look at the growth rate over time. Strategies like the EMA ribbon or the Donchian breakout, they pulled in returns around 13–14% a year. This system, over that same 20-year period, it delivered just 9.5%. That is a huge difference in your account balance over the long run. So yeah, the numbers are not great. And right about now, you're probably thinking, okay, so this is a total waste of time, right? Wrong. Because its true value, its real strength, isn't something you can see in a backtest report. It's in what this strategy teaches you about yourself as a trader. And this is the pivot. This is the key to the whole thing. The strategy's biggest flaw, how rigid and robotic and simple it is actually its greatest asset, especially if you're a trader who's still fighting with discipline and consistency. See, the real job of the Parabolic SAR isn't to be the world's most profitable system. Its job is to be your personal trading coach. It's a drill sergeant. It forces your logical brain to take over from your emotional brain. There is absolutely no room for I think or I feel. The dot tells you when to get in, where your stop is, and when to get out, period. It's the perfect gateway strategy. And as it turns out, it's also a world-class way to trail a stop. So really, the best way to see this strategy is as a set of training wheels. It helps you build that crucial muscle memory for just following a plan without letting fear or greed mess things up. And then, once you've got that discipline down, you can take the SAR indicator itself and plug it in as a fantastic trailing stop module for some of those better performing strategies we've talked about. And that really leaves us with one last question to think about. When you're building your trading career, what's truly more valuable? A really complex tool that might make more money but is hard to follow? Or a simple tool that doesn't perform as well but forges the rock-solid habits and discipline that you're going to need for the rest of your life in the markets? The answer, you might find, isn't as simple as it looks.